Welcome to Bitcoin Escape Plan. We are at a pivotal crossroads right now for Bitcoin with a slight uptrend recovering after a major break to the downside. We're going to go over all the key levels that matter most in today's video. If you are new here, you can go over and check out bitcoinescapeplan.com. Every Monday, I put out a newsletter that goes over all these higher time frame as well as lower time frame targets for the week, as well as a couple other cool topics that I think you're going to find useful whether you are new to crypto or you've been around for a long time. Bitcoinescapeplan.com. Go check it out. Let's get back into the charts. 4-hour time frame first for Bitcoin. What we're seeing at the moment is a slight recovery after the major loss here of the 4-hour anchored VWAP band. Anyone who's already subscribed to this channel knows I talk about this all the time. I never moved that band. I have drawn it from 2011 to now. I just let it tell me what it wants to tell me. So we broke down pretty significantly after the tariff news. That caused fear across the markets. Bitcoin oftentimes is the first to react to it since it is a 24-hour tradable asset class. So we lost it pretty severely, traded back down toward the past the 63K 50% retracement mark, which is going to be important a little bit later on. The next move was pretty clear to the upside. We didn't see all of the volume happen at once. The volume kind of trickled in over the course of this move, indicating that we're not quite ready to give up these levels yet, but you can already see we're still struggling. That's set from these highs of the uptrend bounces previously. This one being the highest, and that's still pretty low, honestly. Still way below where we want to see it. At the moment, that's where the price is struggling. Psychologically speaking, 69.5K, 69K is the 2021 all-time high peak, the second one. So it would make sense now that that's either forming as support or resistance. Currently, it's looking like resistance. And then obviously we have a bit higher than that, the 70.2K Fibonacci pivot that we talk about a lot. This guy here, I know, sorry, I keep jumping from time to time. But that I think is more important than either of these pivots. Though as you can see, it's already respecting that 69.5K pivot. It's having trouble with it. But when we broke that anchor VWAP band, which I believe is right around here, 57 something. I know, actually, that might actually be higher. It's right here right now, 65.6. So actually it's sloped down slightly, so it would have been 65.7 when we interacted with it most recently. You can see we're way above it. Where the upper band sits, actually I don't even think that's the correct upper band. I think this is the correct upper band. That's at 95. We're not going to hit that. Let's take a look at the higher time frames and see why that is highly unlikely. Cover those up again. So that's currently where the monthly SMA sits. We have no previous history in all of the history of Bitcoin where we give up the monthly SMA and then we immediately reclaim it. That doesn't happen ever. That's a long period of time that we lost it. Same thing over here. That is a long period of time that we lost it before reclaiming it. And then we touched it again, gave it back, and then continued. It is also the same for 2014. We lost it for a significant period of time. That's the overall trend historically. Now that we have that in mind, let's make some baseless assumptions in the present moment. What that means is that we expect the price to stay down below the monthly SMA for a period of the next basically 6 to 9 months. Most people who've been around in the space for a long period of time believe that the bottom is going to come in sometime around October. I am mostly in this camp as well. I am starting to see some evidence that it might be a little bit earlier than that, but regardless, we are well on our way. Nothing has really changed. Pretty normal price movement. We've dropped down about 52, 53% from the highs then. Where was it over here? At this time, same thing, about 53%. And then in the earlier cycle, it was actually more severe. I believe it was 73 to 77%. But let's stay focused on just the recent price history. Price is behaving very similarly. This guy over here, this is when we fully capitulated on the monthly SMA. This is the May candle. Look at how we look now in February. We are well below the monthly SMA. Already the January candle was well below the monthly SMA. We're only going to continue to get pulled closer towards this bottom Bollinger Band here. And if we are seeing more compression in these cycles, which is kind of tough to say, like this is really zoomed out. So that's pretty severe compression before a movement of expansion, but it's still touching towards the top bands earlier in that previous cycle, whereas here it's breaking out for a while and then it's nowhere near it for the rest of that time. It's still very, very broad during that time. And as you can see, the Bollinger Bands now, very, very broad at the moment. Some evidence that we might start to flatten out, starting to curve a little bit on the upper end. But for the most part, we would expect that to continue to trend down and consolidate before we're able to fully compress and then snap up. And we're nowhere near that at the moment. Like, we have a long way to go before we have significant compression of the bands on the higher time frame. So what we're looking for most predominantly now is where is the price going to go in relation to 64K and 76.2K for the end of the month on Saturday. Now currently, we're towards the bottom half of that range, which is not good. That's going to put pressure in early March back to retest this and potentially punch lower than that if we can't find some support in there. And there's very little support to be found there. Like psychologically speaking, those levels are important because those are the highest closing candles at that time on the monthly level. That's about 61.3 and I believe 59 on the nose. So that and the ETF buyers in 2024, that's kind of like the most realistic like support or floor that we could see here before a relief rally bounce. But if you've been here on this channel for a while, I've been hoping that bounce was going to go as high as 96K since like December, but that's not, I don't think that's what's going to happen. I think that was in January. I think that was the relief rally bounce to 96. And now we're already on our way to capitulation. We're already on our way to new lows. I'm seeing more and more chaos around the crypto market structure bill. No one can come to any agreements. More and more people calling for, MicroStrategy to one day explode and the US government is going to take all their Bitcoin. Like, we're not quite at peak lunacy yet, but we're getting close to peak lunacy, I think, in the markets. And that's only going to get worse around July. And again, Bitcoin is a 24-hour traded asset, which means I just think Bitcoin is going to be the punching bag this year, essentially. It's going to get hit harder than most other assets because gold looks way better than this, and even SPY looks way better than this right now. So there's no reason for people to take their money out of those assets and put it into this one until we actually have confirmation of where the lows are, which is going to take most of the rest of the year. I've talked about it multiple times on this channel. I think that the lows are somewhere between about 34 and 39K. If we think about it from a psychological support level, that's because 32 and 35K, half of the previous 2021 all-time highs. Those are super important ranges in 2023, and then I would expect those to act as support levels and for us to probably hit well above that. Very similarly to in 2022, the bottom was 15.4, but where we actually peaked and had some support in the previous cycle was a bit above 10 and a bit above 13.3. So 13.3 to 10, same as 32 to 35, kind of functioned as like that absolute bottommost rung of support that the price was unlikely to break through. And we have to assume that it's going to be very, very similar here, I think, where those buys in the middle at this time are going to represent the, like, it's going to rip through the ETF buyers likely. It's going to rip through anyone who bought at the peaks in 2021 and for whatever reason did not take profits over here. The serial bad luck people. That's, I think, where it's going to like actually find some support is by this time savvy investors have started, dollar cost averaging in heavy. And I would imagine something very similar this time where we break down to just above those levels. I don't have any emotions around this. I don't really give a shit if it's closer to 34 or closer to 39. Like, I don't care. I'll be implementing my own strategy pretty much as soon as we hit below 50. Regardless of how much cash I'm able to throw at it. It doesn't matter, nor does it matter for you. Like, what matters is when the price is below the monthly or weekly SMA, that's a better time to buy than any other time historically. Until that trend breaks, which we have no evidence that it's going to do so, governments are stockpiling Bitcoin, corporations are stockpiling Bitcoin, corporations are finding clever ways for you to pay for their services and products in Bitcoin. It's not going anywhere. This chart will recover. It'll recover in a very meaningful way. I would assume by 2029, the price will be closer to $210,000 or $250,000, which makes anything below 100K a pretty attractive dollar cost average spot. Me personally, I would wait a little bit longer because I do think we're going to see a fairly significant drop. Even let's just see. Oh, I did not mean to press caps lock. Oh, pressing the wrong hotkey. I'm trying to measure. Oh, hold on, I'm almost there. I'm almost able to measure the most basic tool. God damn. All right, so this is 39. That's another 45% drop from where we are currently. Call it 43. I did not measure that properly. That's pretty significant for you to put money in now and then to watch it go down by 40% in the short term, especially if you are lump sum instead of dollar cost averaging during that time. It's like, I think it's time for DCA, not quite time for lump sum yet. We still have downside pressure to come. Now, do I think that we're going to shoot right down to 44 if we lose this 64K pivot? Probably not immediately. If we look back here though, most of this move was already done by about June. And then it did drop a little bit lower than that. Let's see. Oh, look at that. Measured it on the first try. It did drop about another 20% from that. So if we measure that as well, yeah, that would put us at like 35 roughly. So if we're using that as our base case here, the full drop actually could happen very quickly, depending again on where we close in relation to that. These are already pretty big candles. These two are pretty significant. So it's kind of tough to say, like, this one closing closer to up here puts more pressure to it taking multiple months. Whereas again, if this closes the month closer to down here, then it may rip right down to that almost all in one event. In which case, just be very careful. Like trading with leverage, I think is a little bit hairy at this particular point in the market, but it's going to be pretty attractive, I think, a little bit later on in the year. So that's what we would be looking for, is where does the price close in relation to the 64K pivot on Saturday? That's going to put pressure on the weekly close as well, which is slightly different. At the moment, showing a little bit of, I would say, consolidation. I would hesitate to say that is strength. That's definitely downside pressure towards the 64K pivot. Even just us wicking to it again, rather than these two previous weeks, we did not wick to it. We were above it still. So that is putting more downside pressure. And again, a monthly close on Saturday that is closer to 64K than 76.2K is probably going to have a bearish reaction for the end of the week as well. We'll still have most of Sunday before the Sunday close. And that would pull the price down even further. And then we have two higher time frame negative closes right around when we need to see strength on the daily SMA. This is pretty important because we've lost it since about the middle of January and shown nothing but weakness since that point. This is actually the first time that we have a candle that is, remember, it hasn't closed yet. We still have, whatever that is, 4 more hours left in the day. It hasn't closed yet, so there's still some time for it to break down. There's still some time for us to register this as a failure of the 70.2K pivot. But it is also quite possible, if it can show strength there, that we start trying to see these levels again. But it's hard for me to believe the price is going to go higher than, say, 80K. There's just not really a lot of strength on the chart at the moment. We're below the lows in the 2025 cycle by a margin. And that probably is what price is looking for confirmation of, honestly, is if we can get a relief rally as high as that, it's going to want to know, okay, are we able to stay above those lows, or are we forming those lows as resistance? And that's just going to give more credence again to the overall trend, which is downward, which again should not be bad news. Like there are ways where you can short this momentum. There are plenty of instruments that allow you to do that. So if you need short-term income from trading, you can make it that way, or you can just focus on your job. Whatever you do to make income outside of trading, focus on that to be ready to dollar cost average when it counts. Which historically, you got to remember the context of all the people who bought these. These are all the retirees. These are all the people who bought the IBIT ETF en masse, and those people are either going to panic right now when the price drops below their cost basis, or they're going to dump a ton of money in at those levels with the expectation that it's going to go back above these ones before too long, which I share that same expectation. I do believe that that is what's going to occur. But if we look at the past cycles, this mid-cycle drop, which is more prominent from last cycle than the 2017 one, but that kind of forms as a bottom floor for a bit. And I think it's going to be the same exact for us. So we may not shoot to 44 immediately because we have some support in about 55 to 60. So it may chop around there for a little while, like here, we retested the weekly SMA around March, April. And I had been talking about that for a while on the channel, but it's looking ugly to me. Like it has broken down pretty comfortably past that 96K pivot. So what happens is whenever we do interact with that, 96K pivot is going to act as resistance, whether we want it to or not. It's just too far broken down below. And I think it's way more likely at this point that price doesn't even interact with the weekly SMA again until, we're getting the SMA down here at like 80K, certainly below 84K. And again, any reaction there that is not met with dramatic upside is going to be, viewed as a bearish momentum continuation, and it's just not good for the price. So the weekly we can have another interaction with, but the monthly it's likely that we have completely passed by, and the monthly is sitting at about 89.29, which means that this 97.9K peak in January is going to be the high point of this year. It's not going to go any higher than that, I don't think, for the entire year. Unless, again, there's a possibility we see the bottom earlier. We see the bottom not in October, but we see it in, say July or August. It's possible that from there we snap back considerably higher. But I mean, that would be a massive recovery. If we think we're going to be down here, that would be 140% rally on the year, which I don't think is happening without stablecoins being fully enacted. And that does not happen, to my knowledge, until January of 2027. And I have heard some talks that it might go even longer. So whenever they finalize that bill, which I think is sometime in July, because that's about a year after they proposed it, it doesn't go into full effect with the banks, I think, until January of next year. So all the liquidity that people equate to that narrative does not exist yet. It is not presently, available for use in the markets. So I think that times are going to continue to get worse for a short period of time for Bitcoin. I know that you don't want to hear that. Hopefully you can retool your mentality. So that is a good thing for you to hear, not a bad one. But that's what I would be focused on, is whatever you do to make money, focus on making more of it so you can be prepared as price continues to drop, because it will. It very likely will break. I would think, like I said, it may take a couple weeks, potentially even months in between these ranges. We technically, these guys, 96 to 76.2, that's 1, 2, 3, 4-ish months that it took for it to fully give up that range. Whereas, this one was pretty quick. Well, actually, no, we did spend 1, 2, 3, 4, about 5 months in that range. So it kind of remains to be seen whether we're going to give up this range that quickly. And it is a pivotal one. Again, 63K being the 50% psychological retracement level, and 69 and 73.8K being the previous all-time high levels. So it would make sense that we would have some support in this range and for it to take longer, like it's taking longer for the weekly right now. But our best case scenario in this instance would have been a relief rally to a key pivot. And when it happened here, we were still above the monthly SMA. We're not above the monthly SMA anymore. So overwhelmingly, when we have interacted with the monthly SMA in this way, it pushes the price downward, regardless of what the other time frames say. And quite frankly, the weekly is saying the same thing. It's saying bearish momentum, bearish continuation. So our best hope, I think, for any relief rally here is probably around 80K. And it's more likely that it never even gets there. I would not have a problem with being wrong about that and it getting it. I think that's a better position to take a short than most other spots. But in general, we should expect bearish continuation and for the narrative to remain the same as it has in past cycles, which would put the bottom somewhere around October. If it's about 12 months from whenever the all-time high is. There's no guarantee that that is how it takes place, but it's been pretty reliable in past cycles that it happens around then. And by then, I would imagine the other markets are showing significant weakness. Again, other than gold, it is my opinion on this channel that I think gold might rip until like 2029, 2030, based on my previous historical analysis of that. I have a video for that if you want to go check it out. It's probably an older one at this point. But when there's significant uncertainty in the other markets, money flows to gold, like that's just the trustworthy one. And there are global macro, narratives around that, around how other dollars are like debasing, they're losing faith in the US dollar as well. It's losing a lot of its customers of debt. So really we are seeing a major shift in the broader economic policy. And again, Bitcoin is going to get hit hardest when we are in periods of uncertainty because it sells or buys 24 hours a day, period. Like that's just reality. That's a feature, not a bug. And that's a good thing, quite frankly. The volatility is a tool. It's a gift for you to be able to acquire more of it at levels that are more beneficial to you in later years. Anyone who bought the highs, you got to wait 5 years for your Bitcoin to guaranteed be in profit. But anyone who buys the relative lows, you don't really have to wait that long. Even if you bought here, on the way down as we were dropping there, you really only had to wait like a year before you're in profit forever. As long as the trend holds, which I believe that it will. I personally believe that anyone who buys below around 100K will be fine. After 2030, I would expect it's going to retrace down back to 100K regardless of wherever it runs in 2029. But any price below 100K, I think, is a steal, quite frankly. So you really should reframe 2026 as the best year for Bitcoin. Maybe I'll even put that as the caption for this or the title. But yeah, hopefully this was helpful to you. Like and subscribe. Go check out the newsletter if you want a lot of this in written form instead of having to listen to me ramble about it. I'm really studying these 4-hour candle breaks and I'm going to be back testing my trading strategy on that. So I'll let you know how successful it is. And other than that, I'll see you on Friday. Have a great week, everybody.